Okay, tonight's class will be very, very, very short. Very, very, very short. Not much people are online. Let's just do the little we can do. I'll be showing us support and resistance zone. I know we've talked about support and resistance before, but we did not really go deep into it. So I will be talking about support and resistance zone. Supports and resistance zone. Let me hide my candles. So I would explain with, I'll return back to the candles. I would explain with the two first, then return back to it. So what do we mean by support and resistance? From our previous videos, you should have an idea of what a support is already. You should have an idea what a support is already. Let's say you have a pattern like this. Support and resistance zone. So you can see this following a kind of trend. It's going in a particular direction. It respects a particular level. It respects a particular level. Most people mistake supports as just ordinary lines. Support are not just horizontal lines. Support are zones so that it can break above a particular line. This is what I mean. Let's say the first time we tested this point, the second time we tested this point, so they would automatically assume the support is right here, which is resistance rather, resistance is right there, which is not completely correct. The resistance or a support now is meant to be a zone such that it can break above this very line, but not too far from the line, and still return. You can see it returned back and respected it here again and back. You get. So how do we trade? Like I said, it's a zone, and I'll be showing us how to pick the zone. When you have support and resistance, if you look at the history, something like this is most likely to have happened before, whereby you have a support turning into a resistance. Something like this would most likely have happened before. That is the first way of considering your support and resistance zone. So in this case now, you're not just looking at the line. You can see for this, okay, let me change the color of this. For the red, this part serves as a resistance. That's this one now is a history. So let me take it back so you don't get confused. This very one now is like a history, something that has happened before. So you most likely see it like this happening. You most likely see it like this, so that it has respected this area before, and now it is coming here to respect the area again. So what do you mean by this? This at this point, it served as a support, but it broke down to this place, it retested. Now it is serving as a resistance. It is serving as a resistance. So this is a demand zone. A resistance zone is a demand zone, while a support zone rather, pardon, a support zone is a demand zone, while a resistance zone is a supply zone. Is a supply zone. So this is how we would watch out for support and resistance zones. Secondly, how to watch out are area of values, where you have the market coming to test a particular level severally. When it is testing the level, it has tested it once, twice, then you can draw a line. Then you are hoping it will test it the third time. When it does, then that confirms your support or resistance. If you should return back to that level the fourth time, then you can have a very strong assurance to pick a trade. Even from the third time, you can have an assurance to pick the trade. So your area of value. Then the third, we'll consider major candles, like the candles, major candle patterns, the candles we've spoken about. Let's say at this point you have a hammer. At this point you have a hammer, and then the chart reversed. At this point you have a bullish engulfing candle, and the chart reversed. At this point, let's say you have a tweezer's bottom, it reversed. So this gives you confirmation that this area, something is happening on this area. So this area is now a support. This area is now a resistance. It's now a resistance. So I hope you're following, and I hope you don't understand. I hope you're following. So this is horizontal support and resistance. We can have diagonal support and resistance. In our previous video, I've spoken about this. For you to have okay, let's just continue. You can have a diagonal support and resistance. Something like this. Basically, we draw support for an uptrend. Basically, we draw supports for an uptrend, where you'd see us drawing both support and resistance for a particular trend. That is now a channel and not just a trend. That now becomes a channel and not just a trend. I've spoken about this in our previous video. So now this, you can call this a channel. You can call this a channel. This part is serving as a resistance. This part is serving as a support. You can call it a channel. It's just like a pipe or a tunnel. You can call the whole of this now a channel. You can call this a channel. The same thing can happen for the downtrend. So for the downtrend, basically we have resistance. We draw resistance basically for downtrends. But a situation whereby you have the resistance acting out well, it can also be a channel. It can also be a channel. So basically what we're expecting to see from the resistance is this, from your diagonal resistance, from your diagonal downtrend is a resistance line. Is a resistance line. So it's possible then you have something like this. So now this becomes a channel. This class will be very short. We'll be ending soon. We'll be ending soon in about 14 minutes. We'll be ending the class in about 14 minutes. So this is now a channel. This is a falling channel. This is a rising channel. A falling channel for this, the downtrend, the falling channel, a rising channel. A rising channel. So if there's any question, please you can always unmute your mic and ask. If there's any question, you can always unmute your mic and ask. For the horizontal as well, you can also have a channel. You can have a channel for horizontal. So for horizontal, your support can come in any form. You know, for when we're talking about the diagonal, we said basically support is for uptrend, resistance is for downtrend. But for the diagonal, you can have support or resistance anyhow. It does not have any specification. But basically for uptrends, we have supports. We should have support for uptrends and for downtrend. So you can see the diagonal. Basically, it has both support and resistance. It does not matter which direction. Just it depends basically on how your chart is looking like. I've discussed this before. That's why I'm kind of rushing, and I expected we should have known this already. So let's go to the real chart to look for support and resistance now. Well, as a new time trader, maybe you might not see it easily, but I can cite supports here already. You can see it tested this point here, tested this point, and at that point you can, if you look at that point very well, there's a doji there. If you look at this point, there is a doji forming here before this came up and this, and you can see this is it. This is almost like a tweezer's bottom. Those like it has candles above. This is most just like a tweezer's bottom. If you come to this other part where you respected the line again, you can see a doji here, then and a bullish engulfing candle. So this gives you an assurance that you can draw a horizontal line here. So let me zoom out. It came down to this level, although it did not get here. Like I said, it is a zone and not just a line. A zone and not just a line. You can see it came down here, but still did not get to this point. So it's more like a zone and not just a line. If I should draw above, I can see a resistance here. You can see it's respected this level here first. And what candle can you see there? This is a doji, then a bearish engulfing candle. And after that, you can see what happened. At this point, you can see it respected it severally. It started respecting it here with a series of candles. Most likely when you have a support or resistance like this, you can have lineup of candles before it falls. You would just see the candle going, there will be no particular direction. So you can have a choppy trend around here. When you go to lower time frame, this is a daily time frame. When you go to lower time frame, you can see you can have a choppy chart here. Then you can see a bearish engulfing candle, a bearish engulfing candle. Then it went back up. Let me zoom in. Then it went back up and formed a what? A hanging man. A hanging man. And then you can see how it continued falling for days. And so it continued falling for days. Mouse back. So what are we trying to check for? Support and resistance. Support and resistance. I'll be teaching us on trend lines soon, so I do not really want to go much into the diagonal support and resistance because we'll be using that for trend lines. We're using that for trend lines. You can see this line that we drew as a support. This line, this green line that we drew earlier as a support. Look at how it is acting as a resistance here. Look at, it's acting like a resistance here. You can see this region too. It's acting like a resistance here. Area of values. Area of values. You can see this part. It was falling, it retested here and went up a little before it finally broke to the downside. It retested on this region. So this was a support at a particular time. For like 2 to 3 days, this level was a support level. Now on the daily time frame, so you might not see it clearly. But if you go to the 4-hour, 1 hour, you see it clearly. This was a support here. So you can see these lines work, or the zone I would prefer to say. They actually work. Can you see? Come and see. Come and see. Because it was coming from the downside, and this was the reversal point. It was like a turning point before it went back up. Just imagine. Look at this zone as well. Come back. Look at this zone. So these are not just lines. These are what? Zones. You can see in between the zone, in between support and resistance, it's ranged for some time. So that's about that. Let's try to see another pair. Let's say let's just pick a random pair that maybe we do not even trade. Let's just pick this. I think this is an indices or something. That's a random pair that we do not trade. This one is not loading. Let's see. Let's pick something else. Let's pick a random currency. Okay. Australian dollar USD. I think that's okay. I'm looking for a clearer view. Okay, I can see resistance here. I can see resistance here. Let me put this line here. You can imagine. This is a zone. It tested this point first in April 2016. The next time you can see it going there is in August 2016. The next time in November 2016. Other times are in 2017. Other times were in 2017. Before it finally broke out of that region. It broke out of the region here. You can see it forming a red candle. This is a daily time frame, so you might not see clearly. If you go to the 4-hour, you see a huge pullback because it pulled back for a whole day before it continued. It tested back to that level, and that level that was a resistance before now acted as a support here. You can see it wanted to act as a support here, but eventually it broke down. It broke out of this level, this line. It retested. You can see breakout and retest. I'll be showing us that in our next class. It went back off. It retested here, here, went back, then broke, served as a resistance. It went up and served as a resistance here again. History repeats itself here. I hope you can see this. So this is just for support and resistances. Do we have any questions before we end the class? Sorry that I can't stay for too long tonight.
Okay, sir. Just one question.
Okay, sir. You can go on.
Okay, is from the previous class we then talked on sessions.
Okay, sir.
Okay, my question, I was just thinking about it today. Okay,
All right,
let
sir.
me talk about the Asian session where they have a kind of choppy trend, and he
Ranging
talked
trend
about the London session that okay they might either take a market up or down,
or
and
down.
the New York session, yes, we take it back to it where it was
Where it
coming
is
from.
coming from. Yes, sir.
Yes. So my question is now, like for us to see it very clearly now, let's say London session is taking a market up. Where can
Okay.
we see it very clear? Is it on the lower time frame or like on the higher time frame
You
for
know,
that day or for that?
if you are talking about the daily time frame now, if you open a daily chart, you will see just one candle.
Yes, sir.
So if we're talking about sessions and we're making reference to time in between the day, you can't see what is happening under
Mm,
the day from the daily time frame. That is why
okay.
those who trade, those who hold trade for days per se, those who hold the swing traders now, let's say you want to hold trade for a whole day, you can't run your analysis from the daily. Fine, you do top to down, but you can't see much volume from the daily. You have to step down to like 4 hours to see more. If you go down to 1 hour, you would see more. But like I've told us earlier that 4 hour is the most stable time frame that you can be like 80% sure of your analysis. You get. So if you are talking about sessions and you're like, let's say you want to trade based on the daily time frame with sessions,
Mm.
D1 cannot really show you much if you are making reference to the daily sessions. Although the pattern you see under the daily, there's a probability of you seeing it on other higher time frames too, but it might be low compared to the session, compared to, if we're talking about sessions, we're making reference to time, we're making reference to hours. Like the Asian session now, I said I think that's from about 1 a.m. to 6 or 7 a.m. or so. So it would be within
Yes.
that number of
Yeah.
hours. Now, if you are checking from the daily time frame, you would see just one candle
Mm.
going up and down, up and down. So you can't see much from it. But let's say you are looking under the
Okay.
24, under 1 hour time frame, you would see 24 of those candles at the end of the day.
Mm.
You get. So if you go to 30 minutes, you'd see 48 of it. So the analysis would be easier that way. You'd see more details that way compared to when you're on the daily. The lower time frame shows us more details, but higher time frames are more stable, but the details are few. So that is why we call our higher time frames the structural time frames, and we'll call our lower time frames the entry time frames. That is, you run your analysis basically on higher time frames, and you come to take your entries on the smaller time frame. So let's say if you want to trade based on sessions, don't get me wrong, please. You can trade
Mm.
depending on what you see on your strategy. The sessions, these are just things we put into consideration when trading. So let's say you are trading and you see your edge in the market, your strategies or something, you do not really have to follow the session if you're sure of what you're doing. But the session, let's say you are trading 15 minutes time frame or 1 hour time frame, the sessions will just help you understand that, okay, the market might not go beyond this level because we're in the Asian session, because it is ranging. When you're in the London session and you're trading in
Mm.
between the day,
Yeah.
it can let you know that, okay, this thing might go to its peak, and okay, when we're getting to the New York session, I should be expecting a reversal. There should be a break in structure or a change in trend when it is now the New York session. You
Mm.
understand, sir?
Yes, sir. Yes,
So
sir.
this would help you
Thank you,
trade
sir.
better. You'd have more understanding of it. So we do not just base on one particular stuff. We put everything into consideration. So there are certain checklists, like this session now, it should just be like a checklist. So when you want to pick a trade, you should have a checklist. Okay, what have you seen? Okay, I consider the session. I saw maybe a bullish candle, a bearish candle. I saw this particular pattern. I traded based on this, and this. So it's just more like a checklist or a strategy for entry. Okay, now we're moving from the London session to the New York session. I'm expecting a kind of change in trend. It is not necessary that you see the change in trend, but when you are suspecting, when you've done your analysis and you see that there's a probability that this thing should have gotten to its end. Let's say it is now in a resistance zone and it is about time for the New York session to come up, then this gives me more assurance like, oh wow, from the London session to the New York session, I should expect a reversal back to where it is coming from. Okay, that means my analysis is right that there will be a change in trend soon.
Mm.
So when you see the trend, you go to your lower time frame and you pick your entry. Now the trend is returning back to where it is coming from. You should give you a signal that okay, I might opt out of this trade very soon because what is the New York session is also taking back to where it is coming from. It might not go beyond this level. So I hope you understand that, sir.
Yes, sir.
So are we good? Or any more questions? Hello? Hello? Okay, I guess your network will be ending the class here. So if you have any further question, you can drop in my DM. Thank you and good night.
Okay, sir. Good night, sir.
Yes, sir.